Hello everyone. As expected, last night Fed kept the interest rate unchanged as it is for the straight third FOMC meeting, and it is what widely expected, so no surprise there. But the important thing for us to understand is what Fed chairman said in his press conference. And also most investors were afraid about the future projection, like because of this Trump tariff, how much the inflation will increase, will it cause the recession, and will Fed cut any interest rate this year, etc. Since all these will defend the US market, thus the global momentum and thus the Indian market. Please look at this Nasdaq price movement. That itself explains completely about what happened yesterday. Here, for most of the day, it traded near mild positive, but as soon as the press conference started, it started to increase, and after the press conference, it had mild profit booking. But overall, market took the event as positive. If anyone fancies seeing the whole video, please have a go. I will attach the video link in the pinned comment. First of all, as we discussed, Fed paused the interest rate 4.25 to 4.5% for the third time. Now coming about future inflation, because of this trade policy changes and tariffs, Fed chairman acknowledged there is a slight increase in the inflation by end of this year, but not crazy increase like what Michigan University projection above 4.5%. If required, please pause and have a look. In the last December month 2024, Fed said at the end of 2025, they are expecting the PC inflation, both headline and core, to come around 2.5%. That now they are reprojecting headline PC inflation to come around 2.7% and core PC inflation 2.8%. In simple, compared to last December month projection, both headline PC inflation and core PC inflation increased, but not crazy as investors were afraid. Now, inflation aside, what about recession? In US, it's called a recession if two back-to-back quarter GDP contracted means. For this, Fed chairman again completely ruled out the recession. He said he's not at all seeing any sign for recession, but here too they acknowledged the economic slowdown, probably due to new government's tariff and trade policy change. In December month 2024, they projected the US economy in 2025 calendar year to grow 2.1%. That now they revised it to 1.7%. Hence, it seems Fed is confident that economy is growing and not at all bothering about contraction or recession. Same projection for unemployment, mild short-term increase, but in long run, no influence. Next comes the important projection. Since Fed wants to slow the economy to reduce the inflation, here economy is slowing, but unexpectedly inflation also expects to increase. Hence, considering all, Fed didn't change their future interest rate projection. For this year, they projected that they're going to perform 2 interest rate cut, and even on longer run, interest rate projection was unchanged 3%. So the takeaway is Fed said no recession, tariff expects to increase the inflation and to slow economy, but in the small desirable quantity. Hence, Fed is going to keep their interest rate cut plan as they previously projected, no change there too. Suppose by chance if economic condition worsen means, then Fed chairman gave his assurance that he and committee is ready to cut the interest rate. On top of that, he said Fed already reduced their balance sheet by over $2 trillion US. Hence, going forward from April month onwards, they are going to reduce their pace at which they offloading the balance sheet, like from present $25 billion US to just $5 billion US. This is huge positive. If Fed didn't offload their balance sheet means, then relatively companies can raise money easy and cheaper. So overall, FOMC meeting and press conference conclusion, Fed still believe and acknowledged inflation is still under control, labor market and economy is strong and okay, and at least 2 interest rate cut in 2025 and signal that no sign of recession. Because of this dovish press conference, US market becomes more bullish. In the end, Dow Jones increased 0.92%, S&P 500 was up by 1.08%, and Nasdaq outperformed all, was up by 1.41%. In case of VIX, from around 22, it dropped below 20. And this US market positivity transferred into GIFT Nifty. Today early morning, it moved about 23,100 mark, but after that, it traded at 23,067. So equating that with the spot market, for now, it's indicating gap up opening of 100 to 130 points. Similarly, regarding Indian ADR, as it is all closed positive, and even if we calculate the arbitrage with the dollar premium, both banks and IT ADR indicating 0.5 to 1% positive. Then coming about oil, it didn't change much. At the time of this video, Brent crude closed at around 71 US dollars per barrel and WTI crude trading around 67 US dollars per barrel. As a summary, US Fed chairman spoke dovish with his positive projection, which in turn made the US market, GIFT Nifty and Indian ADR all positive. One more thing about institution, after one day of buying, yesterday again FIA in the cash market turned as net sellers. They net sold for 1100 crore rupees, whereas DI net bought for 2140 crore rupees. Coming to derivative market open interest analysis, first index future FII reduced their short position to 73%. On the other hand, retail people reduced their long position 63%. Then in the index option market, retail traders maintaining their stance approximately net 5% bearish open interest position. On the other hand, proprietary traders reduced their bullishness mildly by selling call options but not significant, since still they are holding massive net 7% bullish open interest position. So overall, retail people make more money if market goes down. On the other hand, if market moves up, then proprietary traders makes more money. FII is inclined more of a neutral with negative bias. Moving on, yesterday as per stock open interest, Infosys, Phoenix Limited, National Aluminium, Dauber, ITC, Colgate Palmolive and Birlasoft were some of the stocks that got an increase in open interest along with a negative close, indicates the short build up. On the other hand, Apollo Tyre, Ashok Leyland, Delivery, Shriram Finance and Chambal Fertilizers were some of the stocks that got an increase in the open interest with a positive price close, which means these stocks got the long build up. About the things to look out, early morning before our market opening, China's interest rate is due. Then during our market hours at 12:30 p.m., UK unemployment and Germany's PPI inflation is due. Then at 2:30 p.m., Europe's economic bulletin data is scheduled release. Then in the aftermarket hours, UK interest rate decision is due. And in night for US, weekly jobs data, Philadelphia manufacturing index, house sales data for February month and Fed balance sheet are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 40 points gap up and for most part of the day it traded above 23,900 mark and closed above. Thus on the daily chart, Nifty formed a small bullish candlestick pattern with upper and lower shadow, indicating a tug of war between buyers and sellers with favoring buyers. In addition, it sustained above short-term moving averages 10 and 20-day exponential moving average with the continuation of higher high, higher low formation, which is positive. Furthermore, RSI momentum indicator maintained its positive bias. So, as an overall, the trend remains healthy and may drive the Nifty towards 23,000 to 23,100 zone in the upcoming sessions. However, in case of consolidation, immediate support is at 22,800 to 22,750 level. In case of Bank Nifty, it performed better than Nifty and closed at above 49,700, the highest closing level since February 10. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern. Here, it reached the upper end of the Bollinger Band. In addition, the short-term moving averages are now trending upwards with sustaining a higher high, higher low formation for the 5th consecutive session. Furthermore, RSI momentum indicator climbed above the 60 mark, signaling strong upward momentum. Hence, now Bank Nifty has to hold above 49,500 zone for an up move towards 50,000, then 50,250 level. On the downside, support is at 49,500, followed by 49,250 level. As per the weekly options data, the maximum call option open interest was at 23,300 strike, followed by 23,000 and 23,100, with maximum new call option writing at 23,300 strike and then 23,100 and 22,900. On the put side, the maximum open interest was at 22,500 strike, followed by 22,800 and 22,700, with maximum new put option writing at 22,900 strike and then 22,800 and 22,850. Thus, from options data, Nifty may trade in the range of 22,500 to 23,300 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.